In this video, we're going to cover how to place a stock trade. The process is fairly straightforward, but if you're new to this, especially if you've never bought or sold a stock before, it can be a little scary. So we're going to walk through it step by step to make sure you are comfortable before ever placing your first trade. So let's go ahead and get started. The first step is an obvious one. You need to open a brokerage account. Now, I generally recommend sticking to one of the big name brand brokers that's been around for a long time. So some of my favorite discount brokers: Fidelity, TD Ameritrade, Charles Schwab, E-Trade, Merrill Edge. All these are fantastic brokers. They have wonderful execution, great platforms, fantastic customer support. And as you can see, their commissions are anywhere from $5 to $7 per trade. Now, I suggest you Google a couple of these just to see if there's any current offers that might entice you to choose one over the other. In order to try to gain your business, they'll run offers throughout the year. So one of them may say, hey, if you open an account before June 30th, your first 60 trades are free. They're commission free. Another might have an offer where if you deposit $10,000 or more, they'll give you a $250 bonus. They're going to vary depending on the broker and the time of year, but it's worth looking into just to see if anything can sweeten the deal for you. Now, step two. You have to fund the account, right? We need to put dollars into this account so you have money to buy and sell stocks with. Now, there's a few ways to do this, and if you're nervous at all, I promise you, once you open this account, call customer support. They will gladly walk through the process to get money to them because that is their entire business. So, a few ways to do this. The first and the quickest is through a wire transfer. Simply wire the funds from your bank account to the broker. Now, depending on where you bank and what kind of account you have, there may be a fee for this, but again, this is the quickest way to get money into your brokerage account. The second is doing an ACH or bank transfer. So you'll either fill out a form online or on paper that your broker will provide. You'll put in your bank account information, and it'll simply transfer dollars from your bank account to your brokerage account. The third option, assuming you have a brokerage somewhere else, is transferring funds from one to the other. So maybe you have an account at Fidelity, you open a new account at Schwab, you call Schwab, say, hey, I've got dollars at Fidelity, here's where they are, here's the account number, can you go get them? They'll take care of the whole process. And then finally, if you're not worried about speed, you can always mail in a check. This is going to take the longest because the check has to arrive there via mail. Then you have to wait several days for it to clear if it's a personal check, but it will eventually get there and allow you to trade. But in either situation, call customer support if you have any questions, and they will gladly walk you through the process if you're bringing dollars over to them. Now, step three, it's time to place a trade. Now, depending on your platform, it's going to look a little bit different, but there are essentially 5 things you need to check when placing a trade. The first is going to ask you for the ticker symbol. So I put AAPL, that's Apple's ticker symbol, but whatever stock you're buying, you'll simply input the ticker symbol into that box. Second, it's going to ask you what action you're trying to take. Are you looking to buy that stock, or are you looking to sell that stock? Pretty self-explanatory. Third is the quantity or number of shares. Do you want to buy 10 shares? Do you want to buy 10,000? That's going to depend on your account size and your personal risk tolerance. Fourth is going to be the order type. Now, generally, it's going to be either a market order or a limit order. In just a moment, I'll show you the difference between those two. They're very straightforward, but you have to select that each time you place a trade. And then finally is the term of that trade. There are generally 2 options. One will say GTC, which stands for good till canceled. This means if you place an order to buy a stock at a certain price, it's much higher than that now, you put in good till canceled, that order will stay on the books until you cancel it, waiting to get that fill. If you do a day order, then whatever that order is, if it's not filled by the end of that trading day, it is deleted and no longer exists. But those are the 5 actions. Once you fill those in, you'll have a button at the bottom that generally says place order or confirm order, something along those lines. Click that, you'll see the confirmation, and you'll have placed your first trade. Now, about these order types, I want you to be sure you understand these. Let's take a look. For our purposes, there are 2 order types you need to concern yourself with. The first and the simplest is a market order. All that means is you're going to buy or sell at the current price. So when people say buy this at the market, sell it at the market. That's what they mean. Whatever price it's trading for right now, give it to me. I'm not going to haggle over the price. The second type of order is what's known as a limit order. Now, an easy way to remember this is a limit order is known as an or better order. Okay, so if you're buying, let's say a stock is trading, $11, and you place a buy limit at $10. What that means is you're willing to buy it at $10 or better, or $10 or less. And that order will not buy the stock unless it comes down to $10 or lower, because you've placed a limit on what you will pay. Conversely, a sell limit means you're willing to sell it at a given price or better, or given price or more. So if a stock's trading for $14, you place a sell limit order at $15, that means you're willing to sell it, but you need at least $15. If it doesn't get up to that price, the order will not fill. Those are the two main types of orders: market orders or sell orders. Now, generally for high volume stocks you want to just get in right now, just place a market order. Limits are usually used for two things. One is penny stocks, very thinly traded stocks, right? So if the bid-ask spread, or what they're offering it for versus what they're selling, is very wide, you may want to use a limit order just to ensure that you don't get a very bad fill price or pay much more than you wanted. The other time you're going to use limit orders is for option trading, because you really want to find that price between the bid and ask and limit how much you pay, so you don't get what's known as slippage, or again, pay a price much higher than you expected. Now, we'll cover that in the future options video, but these are the two types of orders you need to concern yourself with. But that's pretty much it. That's how you buy and sell stocks with an online brokerage. It really is quite simple. Now, I want to give you one final tip. And I tell this to anyone who trades stocks online: get a Post-it note, find your broker's support number, it's usually going to be an 800 number, and stick it on your desk or store it in your phone. Keep it close by, because you never know what's going to happen. And if you place an order incorrectly, or you're worried about a stock, or your internet goes down, you can't place it, you always want to be able to give them a call, have someone pick up the phone and say, hey, get me out of this stock, or I made a mistake, or fix this. And they're always glad to help you. Most of these brokerages have support around the clock whenever the market's open. So just keep that note near you, so you always have kind of an in case of emergency number to call to give you a little bit of peace of mind. But that's it. That's how you buy and sell stocks.